Good day, my name is Christelle from France de Klerk, Independent Technical Analyst. The first one requested was Woolworths. At the moment, we can see that the stochastic is in oversold territory. Both lines within my indicator is pointing downwards, implying that the momentum to the bottom is still in place. That blue line, the K percentage line, which suggests the shorter moving average of the two, is still pointing downwards through that longer L line, implying a negative divergence. However, if we look at the line graph of Woolworths, we can see that the share has found support in the week of the 17th of February around 57 Rand 22. If I change this line graph to candles, we can see that in that week of the 27th of January already, the long lower shadow implied that there were buyers that bought the dips and that started to support that low level at 55 Rand 31. And ever since then, the share has started to consolidate. Technically, some investors would like to wait for higher lows or some other turnaround candle or pattern. We don't see it in the candles yet. Yes, it has started to make stop making new lows, but I don't have a decent morning star formation or a tweezer bottom or a double bottom. I don't have higher lows yet. So technically we should wait for that. If I look at the line graph, my first sign of strength would be above that previous resistance at 59 Rand and 3 cents. By that stage, our stochastic should start to look better again. Hopefully by then, a positive divergence with that blue line breaking upwards through the orange line, and then that might be a great opportunity to start accumulating the share. If we go back, we can see that in the week of the 22nd of July of 2024, the share found supported almost exactly the same level there, around 57 Rand 33, and ever since then the share started to make higher lows and reached a high there of 68 Rand in November 24. So the 40-week moving average at the moment is a resistance, which implies that the long-term sentiment towards the share is negative. If I add my 20-week moving average, very dangerous. It's on the brink to confirm a death cross formation. That is when that shorter 20-week moving average, represented by the green line, starts to break downwards through the red line, the 40-week moving average. And when that happens, a death cross. When the death cross happens, it confirms the bearish trend towards the share. So what we might see, if that stance remains, we might see that the share bounces a little bit, but does not find enough buyers and retrace further. And then very important will be is, can that support around 57.31 hold? If it can't, and that also starts to change into a resistance, it will just confirm the bearish stance. If this 20-week moving average starts to find support on the 40-week and bounce again for higher levels, that will be seen as very positive. That will maybe confirm what's the opposite of a death cross? So a golden cross formation, right? Which will then confirm again a bullish trend towards the share. 57.31 is a strong support, as I've said, and then strong resistance that needs to overcome is 59 Rand and 3 cents for those investors who want to make use of the oversold situation. Momentum, ticker on our exchange, MTM. The share is at the moment at a critical level, right? We saw beautiful upside, found resistance there in December last year at around 31 Rand 23 on a line graph, and then ever since then, lower highs started to become visible. Very important, when it reached that green line, the 20-week moving average, it bounced, tested it, but then there was not enough buyers and changed it into a resistance again. That was an indication for short-term investors that the medium to short-term sentiment towards the share has now changed to negative. The share is now at the 40-week, right, represented by that red line, and that is the long-term sentiment gauge. If the share does not keep that red line, the 40-week, a support, it will be seen as negative, and the long-term sentiment towards momentum will then change to negative. We are in oversold territory, which means the probability for a bounce is there. It's more likely that it will track investors than sellers. However, if the share doesn't do that, it will just confirm the negativity and we can see more downside. If I change this into a candle graph, we can see still red candles, one after the another. We've got 3 red candles, right? Call it the 3 black crows. Now, if we look at the likelihood of a 4th red candle, the likelihood of a 4th black crow is very unlikely. So normally after 3 black crows, you see a green candle. Don't know how high it's going to be, but confirmation of optimism or a little bit of strength obviously will be above last week's high, because that is the first resistance, right? Last week's high, and that is waiting at 28 Rand 20. Above that level, can see a little bit of a bounce, and then hopefully it will confirm a positive divergence on the stochastic, and then maybe attract some buyers again to accumulate the share and support it for upside. We can see the death cross and golden cross formation treated investors very well and confirmed very nicely on the momentum graph, so investors can use that. Richemont share gave a beautiful upside. Look how that beautiful tweezer bottom confirmed there right in November last year that, listen, along with that oversold situation, this is a perfect turnaround candle for Richemont, and it did. Gave beautiful upside, gave a little bit of a pullback here in December of last year, but very, very positive. It remained above that red line, the 40-week moving average, and that gave investors confirmation of a positive technical good buy case, and also confirmed the positive sentiment for long-term investors. Now, it's found resistance in that week of the 10th of February at 3,760 Rand, and now the big test is, will it remain a resistance? This is a lamp pole formation, which means it's dangerous. The upside incline was too fast, too steep, and we can easily maybe see some profit taking again. And very often after a lamp pole formation, one sees a waterfall formation, because once that lamp pole turns around and falls over, it just destroys everything in its path. If I change this to a candle graph, we can start to see lower highs, right? This is not just lower highs on the upper shadows of the candles. If this week's candle, and remember these are weekly graphs, if this week's candle is a proper bearish engulfing candle, we might refer to this as an evening star formation, where I've got a bullish candle followed by a doji in the middle, followed by a bearish candle, and that 3 candle pattern is called an evening star formation, which appears at the top of a rally. And that hints to investors that, listen, the evening is coming, things are getting dark, you can expect more downside and profit taking. Only above the highest portion, and that is above the week of the 10th of February, above that high of 3,835 Rand 26, can we assume again that the momentum to the top can continue, and investors might be able to see more upside. However, take note, my stochastic is extremely overbought. That elastic band is stretched to the side as well as a negative divergence, where that blue line has broken downwards through the orange line, which tells me that the probability for downside is there and is more likely. So profit taking for those who might be in good profits is maybe a decision that one should consider. Vodacom. Investors had to wait a very long time for some upside here, but once it changed that 40-week moving average into a support here back in July last year, gave a beautiful bounce, pulled back. Very positive year in December of last year, when the share kept the 40-week moving average a support with a double bottom. That was very positive, and the share gave a beautiful rally. Now we are overbought. Look at that stochastic. Yes, I've got a negative divergence. My blue line has broken downwards through the orange line, which tells me the probability for downside is there. But what does my candles tell? Yes, I had a tweezer top, a negative, where 2 consecutive candles have found resistance at the same level after a rally, tells me that, listen, this is a turnaround pattern that can spark more profit taking to the downside. So everybody who was in a or is in in profit territory might consider taking some profit here on a weekly graph, right? These are for medium to long-term investors. In other words, people that have a 3-month plus view, medium, 3-month plus, longer, 6-month plus view on a share. Only when that top starts to change into a support again can I expect upside, and when this low of last week's candle changes into a resistance, and that is waiting at 114 rand and 2 cents. Below that level we can see more profit taking to the downside, yeah, then obviously the big test will be when the 40-week moving average is reached. Does it change it into a support or a resistance? Because that will determine what the long-term sentiment for towards Vodacom is. So above that high of 122.68, more upside, and below 114.02 we can expect more downside with this overbought situation. Don't forget to send through your request via email to admin@fransdeklerk.com or via Twitter. Have a fantastic week. Take care.